Global, sparking innovative thoughts. Sawasdee, welcome to another episode of Techsauce Global Podcast. I'm Chawodat Yung Diranon Erpupe, the Techsauce Global Content Editor, and we're going to talk about, yet again, what is expected for the startup ecosystem in Southeast Asia. And we have with us right now someone who has been with Techsauce in our past conferences, and we're very interested to see his perception into the market and how the ecosystem is according to his view. We have Pieter Kemps, the principal of Sequoia of Singapore. He is responsible for establishing and managing Amazon's relations with the startup and venture capital community in Asia. And he engages frequently with leading incubators and VCs across the region, helping them to create value in their portfolio, leveraging the AWS platform. Now, he's been in Southeast Asia for about 8 years now, and he's worked really closely with the ecosystems in Singapore and spent lots of time in Manila, Bangkok, Kuala Lumpur, and Seoul, Taipei, and Hong Kong. Sawasdee, hello, Pieter.
Hi there, how are you?
Oh, good. It's good to see you. I know that we're far apart, and usually, we've been used to seeing you in Bangkok, one-on-one, face-to-face, but this is, of course, the new way. The first question definitely will have to be about 2020. It's a year that everyone remembers, and now, of course, 2021. What do you think the investor outlook has been for startups during 2020 first? Let's talk about 2020 during the initial and, the continuation of the COVID-19 outbreak.
Yeah, sure. No, let me talk about that. But by the way, let me first say you just introduced me and described what I did before Sequoia. Okay. And I've joined after the time in Amazon Web Services that you described. I've spent the last over 6 years at Sequoia Capital. Focused on Series A, B, and primarily seed investment more recently with Surge as well. And within that capacity within Sequoia, but even before, I've obviously seen the ecosystem evolve and emerge in a way. And in that context, obviously 2020 has been a very interesting year, I think, for every industry and for all the startups that we've seen. I think it's been interesting, like Sequoia Capital in the US, our colleagues over there, very early on during COVID, published a memo, if you like, Black Swan memo, as it's often referred to, basically urging founders very early on during the pandemic that was just emerging back then more globally, that every startup basically had to reevaluate all their assumptions and basically go back to the drawing board, right? Like, is our product still needed? Is our business model, our pricing, our go-to-market? Like, you have to basically assess everything. And we even provided a matrix in terms of how you should think about it and how you should think about streamlining your business depending on the impact on your top line revenue. And we've seen many startups take that approach. And what we've obviously seen is that some startups were super heavily hit, right? When you're in travel, as you can imagine, where you're in offline retail, we've seen some companies, lose 80% of their revenue, right? And imagine if you have a solid, like, fixed cost base, like what that does to your bottom line and to your burn, etc. We've seen other companies come out somewhat neutral, and then there's obviously a lot of companies that have actually risen, right? And whether it's been food delivery or actually any e-commerce or even SaaS businesses where maybe during the absolute peak of the pandemic, companies were holding back their budgets and were not spending. But in the back of their minds, they were realizing, oh gosh, like, we've spoken a lot about digital transformation, but actually we've been too slow, we've been too late. We should focus more on automation. We should focus more on software as a service. And that specifically in markets where COVID got a bit more under control in Q4 or even now in Q1, they start to unlock those budgets and are actually spending more, and you see companies bounce back a lot. And so it's been interesting to see how the market responded, and specifically again in Q4, how some companies quickly got back to the same or better top line numbers than before COVID. But what happened during COVID is because people had read that Black Swan memo or had otherwise realized how serious this was, many of them took that as an opportunity to streamline their business. Sometimes, unfortunately, that was accompanied by firing of people and streamlining the organization, reducing headcount, cutting other costs. Many companies reduce their office footprint or even cancel their office leases altogether. But as a result, what you saw is that towards Q4, companies on the top line started to emerge better, but at the bottom line, much better. We've seen many companies actually reach profitability towards Q4 because they've used, like they often say, like never let a crisis go unused, right? Always leverage a crisis. And companies did that a lot. And we've seen companies come out much stronger with a much more healthy profit and loss account with much better bottom line. And I think that is kind of like the silver lining. I think the challenge, frankly, is that it is still up and down in many markets, right? Like Australia was out of it and then went back into a lockdown in Melbourne. I think Auckland in New Zealand is now back in a lockdown. We've seen Vietnam go up and down. I guess Thailand to some extent as well. And so it's still very fragile balance. And you still see some countries getting better, but other countries are still struggling or still up and down. And that leads to a fair amount of insecurity and uncertainty for many startups that we work with. And so it's not fully back up yet, but there's interesting signs of recovery across our portfolio for sure.
Yeah, I can get that. And that is, I think, being felt across the board. I mean, before we had kind of like nationwide global lockdown, and we kind of had a sense of, what the situation was like. But now it's a bit different because you really have to always be on top of the situation. Each country has their own stages of recovery, waves of COVID-19, and also that affects ultimately at the end, how companies are going to, open up again or do their business. I want to go from the overview to I'm going to start with sectors, and then I'm going to go towards, the startups as a unit. We talked about earlier the sectors that were attractive during the crisis. And it's been said before, like from the likes of the latest report, I think Monks Hill just came out saying that the top sectors for them in the past year has been healthcare, health tech, edutech. I think SaaS, as you just mentioned, and other sectors. I want to know more about your perspective as to what were the sectors that you think really benefited more. You mentioned that a little bit, that from this crisis, and do you think that these sectors will continue growing post COVID-19?
Yes and yes. I think the main beneficiaries in a way of COVID, if you like, even though it's somewhat sad, are obviously the essential services industries that can move online. So education moving online, events to some extent moving online, companies like Airmeet in the Sequoia portfolio or Hopin in the West that has grown very rapidly. Companies that are driven by education and ad tech, as you mentioned. Some healthcare services, not all of them. We've also seen healthcare platforms where it's more about physical doctor's appointments or bookings, for example. Like if you cannot see the doctor because it's not safe, then you don't do it, right? Or but stuff that you can provide online is obviously benefiting. And what you see, and I think Facebook did an interesting research about specifically around food delivery. And I think, don't quote me on the numbers, but they said something like 80% of the people that they interviewed had started using food delivery services much more than before. And 43% or something like that said that their increased use would sustain post-COVID. And maybe not as much, but it's just generally driven things to a higher level. And the same could be said for many e-commerce services. So companies in Singapore like Redmart or others have obviously benefited a lot. And I think quite a bit of that will continue post-COVID as well. Yeah. And so I think in general, if you think about
Yeah.
the Southeast Asia market, obviously a lot is driven by e-commerce, because e-commerce also drives logistics, it also drives payments, and in generally it's a market that is most buoyant on the back of consumer demand and consumer services, more so than B2B. So I think from that point of view, many companies actually have benefited, and the interest in the Southeast Asia as a startup market has continued. We've seen towards Q3 last year and Q4 to some extent that some funds, started being less active on the funding side. Mm-hmm. When it comes to Sequoia and Surge, we've been full on, and there's not been any slowdown in investing. And what's interesting is there's many founders where if you now ask me, like, have you ever met them in person? I don't even know whether I've met them in person, because it's so normal to just invest on the back of Zoom meetings and exchanging data and whatnot. So from that point of view, I think the impact on the Southeast Asia market, there's obviously a blip, but again, just like some of the examples at the startup level itself that I mentioned earlier, I think the ecosystem as a whole is coming out stronger on the back of this.
Definitely. And it's interesting to see what it's going to be like after you have that recovery from the outbreak, because, obviously it's not going to go to the way it was before, but then on the other hand, it's not going to be 100% digital, right? So there will be some sort of integration of technology and everyday work or daily livelihoods occurring at the same time. And it's very interesting, as well as you say, e-commerce, that has been a very big boom in Southeast Asia, and that is of course influencing fintech development, everything very much integrated. If I could ask, like, what is the top sector that is of interest to you right now for the rest of 2021, which one would it be out of the ones that we've talked about?
Sorry, which sectors?
Yeah, which sector?
Listen, it's hard to mention one sector, right? I think what you see in general in Southeast Asia, COVID or not, the market is not deep enough to say, oh, we're only doing this sector or whatever, right? And so we continue to see interesting things in commerce and social commerce. We continue to see interesting things in logistics. Like COVID has laid bare a lot of inefficiency in supply chain and lack of redundancy in that supply chain, not being able to be as local, etc. So that is an area that we continue to be looking into. We've done a lot of investments across India and Southeast Asia in ad tech companies like CoLearn in Indonesia, or Unacademy and Byju's in India, and so that is something that we've invested in a lot and will continue to do. Fintech as well, is you see banks and their understatement, but suboptimal user experience lead to a lot of opportunity for wealth management, for insurance, etc. So we invested in companies like Koala on the insurance side in Indonesia. And these markets continue to have a lot of opportunity for companies to emerge and market cap to be created.
Okay, let's take a look at the startup itself. As you said, in the starting stages or the initial stages of COVID-19 and its outbreak, you said in America there was a need to get startups to actually, as you said, reassess, reevaluate how they approach their company. Can you compare the strategies taken by by companies like before COVID and now after COVID? How drastically has it changed, or are the fundamentals in building up your business and your startup is still there?
Yeah, listen, I think frankly, I've seen some companies in Asia react much stronger and faster. Partly driven, by the way, by obviously governments that took like lockdowns, like we've seen in Singapore or in Malaysia or in other parts of the region. We've not seen in the US, or we've only very lately seen in Europe. And so the impact, I think, has been more felt by some of the startups here, and they've taken more action. So if you were to compare, I think that's a fair statement.
So what would, if you were talking to a startup like before COVID and now after COVID, how would it be different?
Yeah, listen, I think one of the trends that I haven't addressed before, but what started to happen at the end of 19 is, and on the back of some IPOs in the US that didn't go well, on the back of specifically WeWork that in the end didn't even IPO, people had seen that there were a lot of companies that had, we always talk within Sequoia about bits versus atoms, right? And bits scale well and normally have higher gross margin. But there were a lot of businesses that were more atom heavy, whether that was Uber or WeWork or Peloton or whatever. Some of them phenomenal businesses, obviously, but not software, not the same level of scalability, higher cost structures, lower gross margin. And despite that, the companies were always seeing very high valuations and a very strong focus on growth despite everything and at the cost of everything. And as a result, burn was really high and people looked only at growth and less at unit economics. On the back of some of those IPOs I mentioned earlier and some of those fallouts, if you like, the ecosystem, the investor landscape started to change a bit and said, let's focus a bit more on unit economics, right? And let's not be okay with incredibly high customer acquisition cost, high CAC, high burn, et cetera, but let's be more prudent and more careful. And let's focus on that more. And so that started to happen. It started to influence the conversations between investors and startups a lot more. It wasn't just like, oh, my GMV or my disbursement or origination or whatever, like top line metric that had no bearing on revenue, let alone gross margin and contribution margin. That started to change a bit. Then when COVID hit, that only like made that sentiment and that move even stronger, where we're now saying like, you know what, we don't know how your top line is going to be. You have to manage for risk. You have to manage for downside. If your unit economics are not in a strong position, this might be extra challenging for you, right? And so we've seen some companies where in 2019, we'd already cautioned them. We already worked with them to lower their burn and get their P&L in shape. I wouldn't say sailed through COVID, but they dealt with it much better. They had much less issues. Whereas companies that still had a bloated like cost structure, unit economics that weren't really working, et cetera, they struggled much more and they had to take much more strong measures during COVID.
Yeah, that's very insightful indeed. Now let's take a look at the markets in Southeast Asia. We've seen you've been very active in various countries, Indonesia, for example. But during 2020, just as I asked about what was the main focus for the sectors, I'd like to ask you which countries were the top interest for you, and also perhaps maybe was it a change or a shift in how things developed prior to COVID-19 and then afterwards in how the ecosystems developed and how, as you mentioned, how the government support for the startups, did it change or
Sure.
did it remain the same?
Yeah. No, it's interesting. Listen, I think if you look at the US, and I'm not sure if many people are familiar with this dynamic, but like many companies incorporate in Delaware, right? That's like many startups, they launch there for all sorts of like tax and regulatory reasons. So they started Delaware C Corp. So you incorporate in Delaware, you raise money in Silicon Valley, in Menlo Park specifically, where many of the VCs are located. If you think about Singapore, you can think about them being both Delaware and Menlo Park for Southeast Asia. We often see startups from Vietnam, from Philippines, from Thailand, and we ask like where you're incorporated, and it's Singapore. Not because we ask them to, because they realize for themselves that that's smart. And part of that is obviously driven by government support and other schemes and et cetera, et cetera. But on the back of that, we've obviously seen a lot of startups in Singapore. And if you look at a market like Singapore, great for many reasons, but obviously a very small domestic market. And so our viewpoint has always been in Singapore, you had to be a regional or a global business to scale. But in markets like Indonesia, the market is so large that you can build very large businesses domestically. So if you look at Tokopedia, that is reported to be worth many billions, or Gojek, same, or Traveloka, same. They're all very large. Like obviously Tokopedia is only Indonesia, Traveloka and Gojek have some business outside, but still are very largely driven by Indonesia. So a market like that due to its sheer population size, GDP per capita, you know, adoption of technology these days, etc. Has led to a lot of investment from investors overall, including from Sequoia. And I think with other markets in Southeast Asia, and including Thailand, including Philippines, including Vietnam, their market size is obviously significantly different than Indonesia, but also like much bigger than Singapore, with a GDP per capita that kind of like differs a bit. And so for the longest time, we felt that in those markets, Thailand, Philippines, Vietnam, like in Singapore, you would have to build a business that is regional and global. I think right now, if you start thinking with a more long-term lens, you can imagine those markets in 5 or 10 years to be large enough, in certain sectors at least, to create very large companies. And so there's a couple of investments made through search, for example, companies like Techsauce in the pharmaceutical space in Vietnam, or Tilio doing like FMCG digitization of supply chain towards the small mom and pop shops, etc., where we think that those can be very large businesses over time in those markets. But the general guidance is still for companies in those markets to take a much more regional and global perspective, and not just think about your own market.
Yeah, that's very interesting that it's still market driven, as is the size of the market is still a big player. But do you think with COVID-19 and digitalization of a lot of things that we do now, there's more push for companies to go global?
I don't know if there's more push for it. I think in general, like if you think about a market like Thailand as well, and you see that in Vietnam also, where because of language and because of culture, we've traditionally seen many founders that look inward and that look at what they know, and they know their own market, and then they develop for their own market, and they've built products that tailor specifically to that market in their own language with their own culture. And they sometimes build a phenomenally nice business in Thailand alone or in Vietnam alone. But then because they didn't have that outlook from the start, they kind of like struggle to then, even go regional, let alone global. And so one of the things we often urge founders to take that more global perspective. And it also ties into the type of founders you then look for, because if there are founders that have traveled abroad or studied abroad or worked abroad or have a bit of a global view, it's easier for them to take that perspective. It's harder if you've never had that experience to then understand how to operate in Singapore or in Australia or in the US for that matter, and to cater to the taste and the likes and the dislikes of those consumers, right? So I think that is quite important.
So you think the level of interest, as you said, because like Thailand and other countries similar to us in terms of market size are kind of stuck in between, because you said, everyone, goes to Singapore, as you said, you compare it to Delaware, to set up business, to set up shop and then go regional or global. And then there's the big markets that are of interest, Indonesia. And you mentioned that there is potential in the markets are in between. How much of a potential do you think there is for countries like us in Thailand to develop further? Or do you think that it's still stagnant in a way?
No, I think it's like markets are never stagnant, and definitely not in Asia and Southeast Asia. Like there's amazing flux and growth and opportunity, which is the good news, right? But it is about how you think about that. Like if you are a fund like Sequoia, where like we have a pretty high bar in terms of what growth needs to be, or what company size needs to be, or scale, with quite a few very large companies in the portfolio, we automatically gravitate towards founders that also think big. And that basically means that they need to think market first, right? And do I understand how to go for a large target addressable market? And so one thing that I mentioned earlier is not just think about your own market, but think about regional and global. The other thing that we're seeing is that, and we've seen that with Thai founders as well, is that they need to think about market size, not just, for example, as Bangkok. right? If I'm based in Bangkok and I've grown up there or I live there and I just think about the tier one city, it's only so big, like it's a big city, right? But in the grand scheme of things, it's only so much. And so either I think regional or global, or I also have to think, what about tier two and tier three cities? How do I address the rest of the pyramid? Like Bangkok is obviously the top in terms of urbanization, in terms of density, in terms of like if you think about GDP per capita of the country versus of Bangkok, it's very different, right? And the lifestyle is very different. And so user behavior is very different. And so what you've seen in China a lot is that there's many services and companies that have become worth billions of dollars that have shied away from the tier one cities and only built for tier two or tier three, right? And so I think that is interesting. And so I would urge like Thai founders as well to think not just about that, but think about that long term. If you think about a company like Telio in Vietnam that Search has backed and Sequoia has backed, and it's not just like Saigon or Hanoi. It is trying to go countrywide across the country, finding the small mom and pop shop, digitizing them, and not just tapping into that bottom of the pyramid, but tapping into a much broader use case, a much broader part of the population. And I think that's important from a market size point of view.
Yeah, talking about that market size and the approach to it, that's very interesting how you say that it's about the market first. Can we leave Bangkok just for a minute, or Thailand for a minute, and go to Indonesia as one of the markets that you have been investing in, Gojek and the Indonesian market, and of course one of the primary reasons is because of the market size. What is the difference then in how the co-founders there think or perceive scaling their businesses compared to Thailand, and what can we learn from that market?
Well, 260 million people or so, right? And
yes.
So in Thailand right now is what, 80, 90 million?
Yeah.
Correct?
Around that, I think.
Yeah. And so again, and I'm not sure exactly about GDP per capita. It will be in the same zone. Thailand might be slightly higher, but that basically means a market that is 2-3x the size of Thailand, right? And so what can you learn from that? Very little, because it's very hard to suddenly turn your market into such a big market. I think what you see though is that at some stage there's a tipping point. At some stage when you see that a market is big enough. And that the adoption is big enough. So I think one of the things that surprises with Indonesia is how quickly certain products went viral. We've seen it with Traveloka, we've seen it with Gojek, we've seen it with Tokopedia. We've seen how Tokopedia has quickly realized that some of these markets, including Indonesia, are low trust societies. And so building trust into that marketplace from day one, in their case, using escrow and using other mechanisms, et cetera, was paramount. And so understanding your own market, your own dynamics, playing into the things that drive a lot of adoption is, I think, what some of the founders over there have done well. And then there's this tipping point in the market at some stage when the skill is such that people start believing like, hey, large businesses can be built, right? And so you see with a market like Indonesia, when Sequoia first invested in Tokopedia, and this was about 7 years ago. If you think about it, right? In the US, you have Amazon and eBay in the early days, two very large players. In whatever Russia or Japan, you have two large players. And so you can always imagine like a large market will have a large horizontal e-commerce winner, right? And then backing one of the few that there are is an easier thesis to invest in, right? And so at some stage, the market is such, like you've actually seen that even in Vietnam already, where you have Tiki and Sendo. If you now ask me what is the largest e-commerce player in Thailand, I'd struggle a bit because I don't think there's one or two big players that have emerged there, and the adoption has not been strong. And frankly, the same is true for Philippines to some extent, where there's some changes been happening in the last 1 year or so, where adoption is increasing. But we've seen that less in Thailand, right? And the interesting thing is when Well, what you've seen in Philippines for a long time, and I'm not sure if Thailand is similar or not, but is where people were consuming a lot of content. They were reading a lot. There was a lot of social behavior, a lot of mobile behavior, but people were not transacting a lot. They might be buying their airline ticket online, but after that, not as much. Whether it was a trust issue or convenience issue, or just friction in the marketplaces that there were. But if e-commerce is not taking flight, then payments is not, and logistics is not, and many of the peripheral services around it are not growing as fast. So that then impacts the overall growth of the ecosystem. And I guess the same is true to some extent for Thailand.
Yeah, that's very interesting. Digitization adoption. Yeah, it does really depend on the market. Here in Thailand, we have seen a lot of increase in purchases online. I think it's a probably mixed between, because of the differences in age groups, and we have an aging society. You know, the older you are, perhaps maybe you'd adopt more of buying things on TV or telesales, but then the younger you are, you do see a lot of activities in purchases made on Facebook. Platforms are outside of main platforms like Lazada and Shopee, which are booming right now. What then is your advice for startups here in Thailand, further on, or extending what you said earlier about how we need to change our perspective and think regional and knowing our market? But during these troubling times, it is a challenge. What is your main advice for startups here in surviving and also growing in 2021?
Yeah, I think first of all, don't in 2021, even though we're not fully recovered yet, don't label it as a crisis anymore. Label it as an opportunity. There's many and go for if you ask me now, should you start a travel company? I'd be a bit more careful, right, and a bit more skeptical. So look for the segments in the markets that are actually offering the same or even more opportunity, right? Think about think about it always go for a large market, and that large market might be Thailand, not just Bangkok, but broader use cases, catering to the entire population, which basically means specifically adopting to tier 2 or 3 cities and areas that are perhaps less crowded. Also then know that it's harder to reach those in a product that involves a lot of atoms, for example, installing hardware or feet on the street sales. So think about digital adoption. And that is what I think has been well done. We have a company in our portfolio called Bukukas that is also tailoring, but then in Indonesia to the small war rooms and mom and pop shops, right? They acquire customers like consumers. There is no feet on the street or sales, right? It's an app that they can use. They start downloading it, they start using it, and they quickly get to whatever millions of merchants that are using it. So think about scalable ways to acquire customers. Think about not just consumer customers, but also B2B and even small shop owners and merchants and whatnot. And then for certain business cases or business models, I should say, think not just about Thailand, but think about overall market and regional, etc. But again, it depends on what you're building. So
that is interesting. A question just came into my head. In terms of digital adoption in Indonesia, because of their vast population, I mean, here in Thailand, one of the challenges is reaching, as you said, not the city people, but the farmers, the people who are, in the provinces. How has Indonesia been successful in getting those people who are not in urban areas to adopt their technology?
I think that the biggest change in the last 3 to 5 years is that if you think about a farmer, if you think about a small shop owner, if you think about any blue collar, any person in the industry, by the way, like 5 years ago, they never used technology. They didn't have a computer. They didn't use software. They didn't have smartphones yet. Now with obviously the smartphones have come down in price so much that pretty much everyone has one. And everyone has started using software. I started using apps, not again software on your laptop, but everyone is on Facebook, or everyone is using Instagram, or everyone uses WhatsApp. And so you see a lot of these companies emerge with tools that are that are leveraging that basic understanding of technology. And so many of them start with integrations with WhatsApp, for example, and leverage like the fact that people are already using WhatsApp and create groups around that or bots on that. Then have their own app where some of the user behavior is basically trained through how you use WhatsApp or how you use Facebook or etc. And so like before, it was super hard. You wanted to sell software to someone 5 years ago, they didn't have email. They couldn't do anything, right? And now, many software is not dependent on an email. It's just a phone number. It's simple software. It's tying into WhatsApp or other tools that are out there. And so that has changed a lot, and that has pretty much unlocked the entire population to services and tools on their mobile, right? And I think that is sometimes overlooked, but the companies that are going fast and unlocking the broader population are leveraging that in a very smart way.
That is true. Definitely. I think we're going the right direction. Because in Thailand, we have a lot of Facebook users and we use Line, not WhatsApp, more here in the market.
Yeah, but same, right?
Yeah, but it's same concept, I think. And it's interesting. And we'll probably be excited to see how it goes. Lastly, do you have any last comments for our viewers? Our viewers range from, small startups, medium-sized startups to corporates. What is your last comment of advice for the rest of this year?
Just go for it. Like, I think, again, like the rest of the year, like what I said earlier, last year has been tough for many folks. And although we're not completely out of it, like it'll definitely be better. And we're seeing a lot of green shoots coming up in businesses or in market opportunities, etc. So there's lots of opportunities to pick from. And in many of these markets, with a higher level of openness and keenness to adopt technology, I think you'll find users, whether it's B2B or consumers, being even more open to using technology of whatever sort. And so the opportunity is there to go for it. And again, like what I said earlier, just think about broaden your own horizon, broaden your own world in terms of how you think about your market and your market size and the size of the problem that you want to address. And I think there's tons of opportunities in Thailand and other markets in Southeast Asia for that matter. So yeah.
Okay, thank you so much, Pieter. And we look forward to seeing you either on screen or off screen here in Bangkok again for our Global Summit. Thank you so much.
Sounds good. I look forward to that. I always enjoyed my time in Bangkok. So thank you so much.
Thank you.
Thank you.
Techsauce, sparking innovative thoughts.